We're going to do a video on the Mosaic Company MOS stock review. We're looking at a daily chart of MOS, and we're looking at a green 5-day, a red 20-day, and a blue 200-day moving average. If you believe in moving averages, please leave us a comment in the section below and tell us why. If you don't believe in them, please leave us a comment in the section below and tell us why you don't like them. But we're going to use them today to show you what's going on with this stock as best we can. And we're going to look at what happened here back in April of 2022 first. To give some context, this stock made a high of 79 bucks and then rallied all the way down, declined all the way down to a July low of about $42. So the reality of the situation is we had a very flat 200-day moving average that you can see the price just completely exploded away from. Now you can build trading models, and we'll show you some algorithmically generated prices in a minute. Stick with us to the very end. We'll show you how to get them for free. But we do algorithmic trading at RBAM Research. That's what we do, build algorithmic trading research models. And you can build a model that'll show you that if the price gets this far away from the moving average or any reasonable distance, it's going to turn around and come back. And you can see, did it here, did it here, did it of course here, and you have to obviously make statistical assumptions and build the model and so forth. But it's a modelable behavior that you can do with algorithms and generate these kind of trading signals to short this market, or to buy it for that matter in other situations, based on how far it travels away from a moving average. So this was a predictable move. I would not say this was a bear market. This was a huge decline in a way overbought bull market, and we came down here. We did violate the 200-day moving average, but I didn't think it's a big deal. It went down, and I would definitely say that was not a bear market in this stock. You can see we put in this low here in July and rallied right back up. So no big deal as far as the 200-day moving average goes. It wasn't flat, but it wasn't really providing a tremendous amount of guidance there. You can see it supported it on the way up. But once the stock gets away from it so far, the stock's going to have to correct, and the 200-day becomes less relevant, at least in the short term. As we move closer to what's going on today, we can see that through this decline, we had great respect for the 20-day moving average, and we've had great respect for the 20-day moving average on the upside as well. We have some consolidation and some distribution here. People are very concerned, very kind of confused as to what's going on right here. And you can see in two places. You can see this distribution right here. We had wild lower highs, higher bottoms, and then we crashed. Same thing. It's not fully developed yet, but you can see we're getting much longer days. In other words, much higher volatility per day. We saw that here, all through here. We saw increased volatility as people were panicking and distributing, and some people were buying the stock. Same thing's going on right here. We're above the 200-day moving average, so people are going to say, hey, this is now a bull market stock. I'm not convinced that this is a bull market stock. It's not a bear market stock. It looks more like, to me, like a sideways stock. It looks to me like it has been oscillating back and forth. I'm not going to say 55 because that's not really accurate, but it's been oscillating back and forth in here in broad swings for quite a while. We are now in August 22nd, exactly where we were at the beginning of the summer. So it has moved back and forth, and that's pretty typical in a lot of stocks if you model them. But what we're getting today is clearly a decline into the 200-day and then just bouncing up and down off the 200-day. So people are confused and don't know what to do with this stock. This is today, the 12th volatility is 51 roughly to $57, and that's significantly greater than a lot of these days in here. Some of the days have been pretty volatile, but for the most part in this stock, a typical day is going to be $2, $3, $4. Today we have volatility in this stock of about almost $6, something like that. This stock, as I record this video, is down 6%, 6.5% on 7.5 million shares. And the typical average daily volume is about 6 million shares, just slightly less than that. It's about 230 on Monday. The stock's down $3.65 and about 6%. So there's a lot of volatility in this stock, and there's a lot of concern as to what this stock's going to do next. If you'll notice, these moving averages have essentially gone flat, the 20 and the 5, so they're pretty much useless. The 200-day is almost flat or near flat, so I wouldn't say you could put a whole lot of faith in what the moving averages are going to do. Just looking at this chart and scanning back and forth as you're watching me do that, I would say that we're probably going to trade down here in the 47 range and probably do that before the end of September. I don't think that's you can call that legitimately a bear market. I just think that's trading range for this stock. Of course, you never can tell if we get good support right here, which I don't think we're going to get, but if we got good support from right where we are today at around the $50 level, then you could see this stock rally up to 59 or even 63. But I think there's at least as much probability as you're going to go down the 40s, 47, 48, $47 level by the 3rd or 4th week in September. So that's my best guess for entertainment purposes only. It's just my opinion, but that's what I'm seeing right now. Not bear, not bull, but some sideways action up and down, and it's a trader's market in this stock. At least that's what I'm seeing right at the moment. What do we need to determine what's really, what our long-term prognosis is for this stock? We need price to get and stay above the 20-day moving average, or get it below and stay below the 20-day moving average. This sideways and flat moving averages, there's really, that's the definition of a trader's market. I checked this stock earlier, MOS. We do not follow it at rbamresearch.com, but we do follow 190 stocks algorithmically, as opposed to technical analysis, as I just showed you with moving averages. These prices are all generated by computer algorithms. They come out every morning before 7 a.m. These are out for September 12th, which is today. Stocks, we cover 190 plus, and they have 1, 5, and 20-day holding periods. These are worst case holding periods, trading days. You get in and take your profits as soon as you get them, or get out worst case at the end of 1 trading day, 5 trading days, or 20 trading days. So get in today, close out worst case end of trading tomorrow, just before the market closes. Same thing for the 5, same thing for the 20. Get in today, take your profits as soon as you get them, even if you got them today on a 20-day hold. Take your profits as soon as you can get it, or worst case, close it out at a loss just before the market closes on the 20th day. These are for entertainment purposes only. You have to do your own analysis, but algorithmic trading gives you specific entry prices, and that's why we like it. If you want to take a look at these every day before 7 a.m. and get them absolutely free, no credit card required, at rbamresearch.com. We cover, in addition to the 190 stocks, we cover the major forex pairs, we cover BTC for crypto, and the most liquid futures contracts. Stocks right now are longs only. Everything else has longs or shorts every day before 7 a.m. There's a link in the description below to rbamresearch.com. Just follow it. You can sign right up with no credit card. If you like this video, please click the like button. If you want to subscribe, please do that. Please leave us a comment and tell us whether you like or don't like a technical analysis. We'd love to hear from you. And for everything you've seen on here, please remember, it's for entertainment purposes only, including our opinions and our entry prices. And you have to do your own analysis. You have to trade at your own risk, and you definitely do.